The latest inflation numbers seal the deal for a Fed rate cut at the Fed's September meeting. The only questions now are how large will the rate cut be, and will we see additional rate cuts before the end of the year? Let's get into it. Today's video is a quick update on the latest developments leading up to the Fed's September meeting. The Consumer Price Index report that the government released this September 11th was the last major data point to be released that could impact the Fed's decision on rate cuts, and the report took away any doubt that a rate cut is coming. As of August, the year-over-year change for the CPI was 2.5%. This was the lowest reading on consumer inflation since March of 2021. We've come a long way since the peak of 9% in June of 2022. This was probably the best inflation report we could have hoped to get before the Fed's meeting. There's no question now that they will cut their Fed funds rate at this September meeting. The big questions now are how big will the rate cut be, and can we expect further rate cuts this year? With regard to the size of the rate cut, many analysts are pointing to the weak jobs report we got in the beginning of September in their case for a large half-point rate cut. The idea being that now that inflation is largely under control, according to the latest numbers, the Fed needs to focus on that miracle of a soft landing where they don't push us into recession and trigger major job losses. I covered that latest jobs report in my last video on the U.S. economic situation, so make sure you check that out if you haven't already. It wasn't a great jobs report. Job growth was below average, and there was a continuation in downward revisions to previous month's estimates. The labor market is still adding jobs, but the weakness we're seeing is, for some, making the case for the Fed to get somewhat aggressive with their rate cuts to prevent job losses from happening. For me, I don't think the Fed will cut by a half point. I think they will cut by just a quarter point. The latest economic data supports the idea of a half-point rate cut, but the Fed has been very careful up to this point, and they don't want to risk a resurgence in inflation by cutting too much too soon. Remember, they disappointed markets earlier this year when they were widely expected to start cutting rates but didn't. Fed Chair Powell made it clear that there would be some pain in the labor market in order to bring down inflation. So I think they're going to just go with a quarter point rate cut and see how the data comes in until their next meeting in November. With respect to whether or not we will see more rate cuts this year, all eyes will be looking at the Fed's updated economic projections, which they will release at the end of their September meeting. This will give us some insights into where the committee sees the Fed funds rate settling in by the end of the year. I personally think they will pencil in at least one additional rate cut, potentially two. The below average job growth and continuing trend of downward revisions in the last jobs report was a big warning sign. And unless we get amazing jobs reports for the next 2 months, I think at least one more rate cut this year will take place. What do you think? Will the Fed get aggressive and rush to rescue of the labor market with some big rate cuts? Or will they stay cautious, take it slow, and so we don't see inflation rise again? Let me know in the comment section down below. If you want to stay up to date on all the developments and my analysis, make sure you are subscribed and hit that notification bell down below. I'll be releasing another update video soon after the Fed's meeting that wraps up on September 18th. If you like the content I put out, make sure to hit that like button before you go to support the channel and help it grow. Thanks for stopping by, and I'll see you in the next video.